Hey everybody, welcome to the morning market briefing. It's Friday, January 30th, 2026. And as one might expect with Tom Russell out of the office, the director of fixed income here, our heart and soul of Fed coverage, missing in action today. We've got a nominee for the Fed chair position to succeed Jerome Powell. It's Kevin Maxwell Warsh, Ben. How we feeling about old K-Max?
Yeah, I don't know if I actually talked to him directly, but he was at the CFA Society Atlanta a couple of years ago. Sam Frost and I went to that talk, and he spoke a lot about how he sees monetary policy and how he saw the economy developing, and I thought he actually approached it with some humility but also conviction. I had a great deal of respect for he's a great talker. I mean, you can see that because he's on TV all the time. I think that Trump sees that as well. But what's interesting about his background, and he's really getting panned in financial markets today, in financial circles, I would say, not financial markets. The markets are relatively dull this morning. But he's getting hit because people think that he's just kind of they're going back and forth by saying he's a hawk and that he wants Fed policy to go back to basically a tight Fed policy and just let the Fed do what it did before 2008. And then they're going back and forth and saying, well, he's just going to do exactly what Trump wants and cut rates and be very interventionist. I think there are going to be big changes in how the Fed conducts policy. And I think probably the biggest change is going to be the fact that that he has a humility about the data. And he used to work for Stan Druckenmiller, who was one of the most legendary hedge fund managers of all time. He generated 30% a year for like 25 years. And he and Besant worked for Druckenmiller. And I think that Druckenmiller made a really good point. He was interviewed a year or two ago about the Fed and said, you know, what would you do with the forward guidance? And Druckenmiller said, I think forward guidance in terms of what the Fed is going to do on rates is incredibly bad, because basically what it does is if the Fed backs off of their forward guidance, they view it as a loss of credibility. He says, if I traded that way, I'd get killed.
Yep.
He said, my biggest strength in trading is that I'm not going to be right every time, but I need to be able to change my mind. And when I do, I can change my mind and change my actions. And I think that is just, when you're setting the price of something and when you're basically trading interest rates like the Federal Reserve is doing, I think that's a really smart thing. You have to be able to change your mind. You can't be going back and forth like crazy, but you have to be able to understand what is going on in the economy and the appropriate policy there. So I think that'll be a big change when Kevin Warsh does come in, assuming he's confirmed by the Senate. I would expect him to be confirmed. He has the resume for it. If he's not confirmed, it's going to be for political reasons.
How about his wife, though? Are you aware?
Yes, very wealthy.
Jane Lauder of Estee Lauder.
Yeah. So a huge Trump donor.
Yeah.
Huge Trump donor.
I wonder, Ben, and Tom might have a better read on this, but I wonder in a situation in which you have a guy that I don't want to make him sound unnecessarily verbose, but a gentleman who certainly doesn't mind talking and giving, informed opinion and analysis with a microphone in his face. That combined with someone who's a bit mistrusting of projected data, could that potentially put us in a position where, really for the last several years, we've just kind of rolled our eyes every time Jay Powell has spoken after a Fed meeting? There's just not much to take away, not much to glean. Could we get more volatility on actual Fed days from someone like that?
I don't think so. And the reason I don't think so is at its core, he doesn't really want to shake things up. I think that he feels very strongly about his convictions, and he's also been lobbying for the Fed chair job for the last 8 years.
Yep.
10 years maybe even. So I think that you have those factors going into it. If you look at Jay Jay Powell, when he first came in, I think he was widely applauded as someone who didn't really talk a whole lot and was just very convicted. I mean, he was a private equity guy. That was the hit on Jay Powell, was that came from private equity, which Trump liked at the time.
Yep.
Until
he didn't.
He didn't. And he would argue that Powell changed, and he might have some arguments for that. But I would say Warsh is probably going to be you're gonna what you see is what going to be what you get. I think that there might be less of a direct line from Kevin Warsh to the Wall Street Journal.
I would expect that.
What is going to be very interesting is going to be Warsh's leadership of the Federal Reserve itself. He actually ran a lot of the operations when he was at the Fed previously, which I think is a point in his favor, that he knows how to run an organization. So I'm curious if he can do that, though, 20 years later with a whole different board that has become increasingly political, and in an era where monetary policy is as interventionist as it ever has been.
Yep. Something to keep an eye on. He will have some interesting data to dissect once he takes over, and we're getting data in right now on PPI, Ben. Expectation was for PPI to be up 0.2% month over month overall, and up 0.2% on the core. That would compute to a 2.8% on the year-over-year number and a 2.9 on the year-over-year core. We came in hot.
Yeah. I don't have the core yet. You might have that.
I've got the core at 0.7 month over month, giving us a 3.3.
Yeah, so all of that coming from services, not goods. So goods actually fell back basically to flat. And goods, if you look at final demand for goods, you're actually seeing the prices there come back to close to 2% actually on a year-over-year basis.
The services side, would you think, I think of data points we discussed earlier in the week, things like consumer confidence really being, kind of at the bottom of the barrel, and yet people still continuing to spend more money and planning to spend money on wants versus needs. Some of that's just where we are economically, and people may look at these overall numbers and say, see, inflation's creeping back in, or impact of tariffs, or these other things. But the reality is, if it's just on the services side, no small part of that is the fact that people are just doing these things.
I think it is because so PPI for services. This is very it gets wonky for people, because you're like, well, what's the cost to the producer? What's the producer price index? All of these things, and what's the final demand versus intermediate demand? What you can look at is, they say 2/3 of the December rise in prices for services can be attributed to a 1.7% jump in margins for final demand trade services.
Which is not something that's shocking.
Right.
The margin story itself.
Exactly. So this is just kind of gets to the convoluted computations of the BLS. Like if a trucking or a logistics or a transportation company is making more profit, then that hurts PPI. So rather than going to these people and saying, what are the costs that you pay for all these things? They look at the margin, because who wants to actually pick up a phone and talk to people? They look at the margin that a company like FedEx is making, for example, or UPS. And if that company's making higher margins, which they are, then that must mean that prices are inflating. And I think that is probably a little bit foolish when you look into the transportation, warehousing, logistics sector, because so many companies have gone out of business. We were so low for so long, and I think that, and then we also took out a ton of trucking companies in the last few months. So freight prices have risen.
They've gone up,
and I think that has played a role in this PPI. So from my perspective, I'm not losing sleep over this number. If I'm looking at the impact of tariffs, the PPI for goods actually fell.
Yep.
And if I'm looking at the services side, Jay Powell actually, on Wednesday said services are trending right around 2%.
Yep.
So, he's been wrong before, like when he said the employment data is the best data that we have, and then like a day later, it was revised down by 1 million jobs. But I don't think he's wrong here. I think services is probably running hotter than inflation, but I don't think it's to the extent that we're seeing in today's PPI number.
We had an interesting market day yesterday. Microsoft down double digits, and yet seeing some resilience from the broader market. Do you view this as, we've talked a lot about broadening out, or do you view this maybe as just cash coming to work?
I think it's just cash coming to work. I think yesterday and really the earnings season so far has done the broadening out trade, has really put a dent into that. I mean, you saw United Rentals yesterday down 14 or 15%. You're seeing other companies. We talked about the chemicals companies yesterday getting hit. I think that this broadening out trade is just not, it's right now it's a financial market trade. It's not an economic trade. And I think that these companies who are providing guidance, who are more in the industrial side of the economy, are providing guidance that's pretty dull in a period where you think the economy is accelerating. So I think that what we saw yesterday was really positive from a financial markets perspective because it shows that money's coming back in. Yet Microsoft down, and yet the Dow Jones was up. The Russell 2000 was up yesterday. S&P 500 was only down 13 basis points. So if you put all that together, I'm saying this is remarkable strength and resilience from the economy and from the market. Because if you told me that Microsoft was going to be down 10% yesterday, I'd say the market's down 1%, at least, maybe 2, potentially 3. Microsoft alone is 7% of the index. That's 70 basis points. That should be off just because of Microsoft.
Yeah, and so for the market to have a tailwind that can overcome that. I think I agree. I don't know that it's just simply, there's more attractive opportunities out there and that there's that level of calculus being made on an individual portfolio by portfolio basis. More likely there's money flooding in, whether it's passively through ETFs, 401ks, whatever it may be, or just active decisions.
Yep. Yeah, because there were companies that I thought should be bought yesterday that weren't really bought. And those didn't really move a whole lot, but it was just, money coming into the index. And you saw that with the rally into the close yesterday. It was just everything started rallying. Even Microsoft went from down 12 to like down 10.
Yeah. Notably, the S&P has outperformed the Mag 7 by right at 1% year to date here 20 days into the year.
That sounds about right.
Something to keep an eye on. I do think there's been a little bit of a tease of broadening out for the market at some point in each of the last 3 or 4 years. So,
yep. And usually it happens at the beginning of the year when everyone resets their book and gets ready to rock and roll.
Yeah, there's a lot of right sizing that's gone on, and people kind of start to rethink about how they're positioning portfolios. Something we're not seeing a lot of reporting on, but in China, Xi has dismissed all his top leaders basically except for one. Is this just a raw consolidation of power? I have a hard time thinking he's consolidating power because, like, what more power is there to consolidate?
Yeah, so basically all his military leaders are gone except his friend Zhang Shengmin. And Zhang, they're now investigating for, accepting bribes and leaking nuclear weapons programs information to the United States. So she is now trying to get rid of Zhang, which would basically mean she is the only guy at the top of the military.
Some would say she's the man.
And I think what you're seeing is you're now starting to hear some reports of there might be a little bit of a insubordination in the military as a result. I don't know if any of that's true. There's probably nothing's going to happen with this, but this is one of those stories that's squarely in the 0.1% chance probability of happening and really blowing over and becoming headline news, but with a potentially substantial impact on the markets. I would say when you don't have any generals, it's kind of difficult to invade places. So I would say Taiwan's pretty much off the table for now.
Yep. Lots of companies reporting. I think for me, just reading through the earnings reports that you sent out earlier, Ben, my biggest takeaway is on the Apple front, when you look at the upgrade cycle that has come through now with the iPhone 17 and the expectation for really several years of like, are we ever going to get one of these big moves? And I would argue combine that with the benefit of, and we still don't have anything new from Siri, no details, nothing rolled out. I view that as a pretty favorable position for them to be in relative to what was the expectation 6 months ago.
I couldn't agree more. I think that iPhone sales have dramatically surprised to the upside. They did exceptionally well in China, by the way, up 38%. But here in the United States, up 12%. Historical Apple super cycles, I call them iPhone super cycles. You know, you think back to the iPhone 6 was a big one. You had the iPhone X and you had the 5G iPhone. And in each of those, you have about usually going about, 2 to 8% growth a year in terms of iPhone revenue. Each of those were in the 25 to 30% plus range. Well, this most recent quarter was 23%. That's a whole lot closer to the super cycle than not. And Apple wasn't even counting on it. So Apple was not counting on this, so they didn't build enough iPhones, which means they left a lot of sales on the table that'll come back and post really good numbers in Q1, or the March quarter. So I expect good growth continuing, and then of course, as you mentioned, we're going to have Siri added later this year. I know they've pushed that out a long time, but when it does happen, that can create a little bit more of a tail because you're not going to be able to get the new Siri on a lot of legacy devices. You'll probably get it on the 17. But I don't know if you're going to get it on the 16.
What's your view on their margin story? We talked about component costs and some of the challenges there, but also the leverage that Apple exerts. What are we seeing margin-wise?
Unbelievable. The highest gross margins on record for the company. This is a company that's dealing with tariff costs. I mean, this is a company that sold off dramatically last year.
They were right in the crosshairs of the
tariffs. And then there's a company that's right in the crosshairs of memory prices. Memory prices famously going up like crazy. Micron's, up 10x over the last couple of years, it seems. They're the big memory chip provider. And yet Apple is able to actually grow gross margin to an all-time high in this environment. And they're doing it on the backs of the iPhone, which is just unbelievable. Yes, services is helping, but it's the product margin on the iPhone that's really boosting things. Some of that's because they are able to insource more chips, which allows more of the economics to accrue to them. But I think they also can strong arm a lot of their suppliers into getting them the best deal out there.
And they're no better picture than just this theme we've seen. Despite consumer confidence, consumer spending is quite consistent. Very strong. Both discretionary and non-discretionary spending is ticking along at a rate you'd like to see. Higher income spending growth is up more, but lower income spending is also up. There's no deterioration there.
Yeah, that's exactly what Visa said, and you're seeing that in iPhone sales too. I mean, you're just not seeing. I mean, we have a chart that we're going to be giving to a large client next week, and if you just look at the numbers, you're hard pressed to see real consternation. I mean, you got FICO scores, which are fine. You have consumer debt payments, which are actually down because student loan payments, the people are paying down their student loans. It's everything's kind of growing faster than GDP is growing way faster than consumer debt right now, and you're seeing that in credit quality. American Express had a little bit of a hit this morning because they grew Gen Z customers 38%. So they're having a little mix shift there that's a little bit negative. But by and large, if you look at credit quality, if you look at delinquencies, they're all in really good shape and really nothing to be too concerned about there.
Two non-earnings related story. Amazon, I mean, we just talked about this, I think, yesterday, but leading the latest round of OpenAI funding. They're going to invest potentially $50 billion. What are they missing?
I don't know why they're doing this, to be honest. I mean, they have Anthropic, which I feel like is moved to the number one seat in terms of the AI guys, at least right now. $50 billion, I mean, into OpenAI sounds just crazy. It would be part of a bigger deal. It'd be part of a $100 billion capital raise for OpenAI as well. I don't know if Amazon is not paying attention to some of these other companies' reports. I mean, they have to be. Microsoft sells down 10% because their backlog with OpenAI grew a ton. Oracle gets smashed because there are concerns that OpenAI is going to pay them. And now Amazon's like, you know what? We haven't done enough of investing in OpenAI and losing market capitalization. So I'm curious to see if they end up.
Let's grow that backlog.
I'm curious to see if they end up doing this. That's a remarkable bet.
I'm trying to think. I don't have one, but do you have a good corollary to this where it seems like every investment is just pushing return on investment further and further away? Do you have a?
Yeah, it's like every time they go out and raise money, it's like, well, it'll take longer for actually to
actually realize this return.
I don't know what they're seeing. I mean, we have so much money flooding in, and Sam Altman is not a guy who's shy. None of these guys are shy. So I don't think that we're really playing without any information that other people have. But yet they're throwing around these billions of dollars like they know it's a sure thing that they're going to make 50% returns on investment on this stuff. So I'm very curious. I was very surprised to see that article from Amazon that they're investing $50 billion.
Alphabet and Meta remain pretty insulated,
and they're performing well.
Yep.
And another company that hasn't invested in them is Apple, and they're performing well.
SpaceX thinking about a merger potentially with Tesla. I think the angle here would be it comes at a time where Tesla is shutting down Model S and Model X production. Also, kind of an easy way to get to the IPO, avoid distraction. They could also do it with XAI. I still feel like SpaceX is destined for its own IPO.
Yeah, I mean, the investment banks probably want it. I think they probably make more money on the IPO than they would on a merger deal. I do think the merger is pretty interesting. If you can just have Tesla issue a bunch of stock and whatever SpaceX shares just convert to Tesla shares, seems like that's a pretty clean way to do it. And all of a sudden, Tesla owners have the diversification of SpaceX. They have a new growth avenue. I don't think Tesla owners would complain about that.
No.
And I think that SpaceX shareholders would be like,
well,
that's kind of
nice.
We've
got liquidity.
We have instant liquidity because the fact of the matter is SpaceX is going to go out and raise capital. And the reason they're raising capital is so that they can go out and shoot up more rockets, not to necessarily, just all of a sudden trade $1.5 trillion of stock on the exchange. So I think it would be an interesting deal.
It seems like two companies that would potentially get a sum of the parts. It seems like the market might view as more valuable than the individual components, just given the hype.
Yeah, I would agree.
Busy week next week. We'll get all kinds of data coming through. We'll get ISM manufacturing on Monday morning. We'll get the JOLTS openings on Tuesday, ISM services on Wednesday, and then a whole bunch of earnings flowing through. University of Michigan sentiment Friday morning, something to look forward to. Amazon certainly top of the list in terms of earnings, as well as Alphabet. What's top of mind for you?
There's a lot of interesting individual stories and some big macro data. Honestly, the one thing that I'm paying attention to next week is how does the market trade? We've got some companies that are trading at remarkably low valuations. Visa, historical price earnings ratio of 33. It's trading at 23. Microsoft is trading at 24 times earnings. These are companies that a couple of years ago people would say you have to have in every portfolio. They've got franchise value. They have an indestructible moat. And I don't think that's really changed. But the advent of crypto, the advent of AI has really disrupted a lot of these valuations. And it seems like only a couple of years ago we were saying these valuations are just insane. Well, they're basically at market multiples now, which to me I think is incredibly attractive. And I think I'm very curious to see if the market starts to appreciate that. And they may start to appreciate it next week, but we've got a lot of bits of news. But I'm trying to keep your eye on the ball.
Yep.
It's like you're going through, you're getting a bunch of stuff shot at you from all directions, but you just got to keep moving forward.
I love it. All right, we'll wrap it up there. Y'all have a great weekend. Talk to you soon.